If you paid attention to last week, you saw that inflation is hot, 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 right? The January CPI and PPI reports showing that prices are rising, not only on a month over month basis, but they're rising actually on a year over year basis as well, more than the expectation, right? And that caused markets to become unsettled as we move through the week. And then we got more hawkish Fed comments out of both St. Louis Fed President Jimmy Bullard as well as Cleveland's Fed President Loretta Mester, right? They're both now floating the idea of a 6% terminal rate. Now remember, that's up from 4.75, 5, and then it was 5, 5.25, and then they were talking about 5.25, 5.5, which I don't think any of that is doing. So they're planting out there the conversation 5.5 to 6 because they want to get it out there in the public square. They want people to understand that potentially that is where rates are going to have to go, right? And look, we've been talking about this for a while. Traders and analysts have taken stocks to levels that are well ahead of themselves, right? Considering where we are in the economy and considering all the uncertainty and lack of clarity surrounding the Fed. And so therefore, the pullback that we saw in the market should not be surprising to anybody, right? Now listen, all this news, all this talk about higher rates and a more aggressive Fed sent bond prices plunging and bond yields surging. And the one very interesting fact that happened was the 6-month and 1-year T-bills are now yielding better than 5%, right? Think about that for 1 minute. 6-month and 1-year T-bills yielding a little bit better than 5%. So that's absolutely going to cause a headwind for stocks, at least in the short term, right? Until investors and traders and algos kind of get used to and start to digest and chew on the idea that the rates potentially could go there, right? And the idea that this idea that the Fed is going to pause and then pivot, that also has to stop, right? Certainly they're going to pause. They'll pause either in May or they'll pause in June. That doesn't really make the difference so much. But the idea of a pivot is completely off the table because a pivot suggests that the economy needs stimulation. Is anyone out there think that the economy needs any stimulation at all, considering the job market's so strong, the consumer doesn't appear to be pulling back, demand is strong for everything across the board? So I don't think it is. And so the idea that the Fed is going to pivot and actually cut rates this year is illogical to me.